My colleagues and I have one overarching goal: to sustain the economic expansion with a strong job market and stable prices for the benefit of the American people. So far this year, the economy has performed reasonably well, with solid fundamentals supporting continued growth and strong employment. Inflation has been running somewhat below our objective, but we've expected it to pick up, supported by solid growth and a strong job market. Most estimates of the financial rate.
Don't believe those phony numbers when you hear 4.9 and 5% unemployment. The number's probably 28, 29, as high as 35. In fact, I even heard recently 42%.
We now closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion with a strong labor market and inflation near its 2% objective.
The next thing they're going to do is cut rates. They're going back down to zero, but it's not going to stop the bear market, and it's not going to stop the recession. It will probably kickstart inflation into a higher gear. But, you know, Charlie, before I came on, Charlie was saying there's a lot of fear out there. There's not. There's an absence of fear. There's a lot of complacency out there. People should be afraid, more so about what's going to happen to the economy. There is going to be another financial crisis. The next recession is going to be much worse than the last one.
Even though there is a tremendous amount of evidence to the contrary, the Federal Reserve continues to insist that the U.S. economy is in good shape. On Wednesday, Federal Reserve Chair Jerome Powell told the nation that the economy has performed relatively well in 2019, and he insisted that the baseline outlook is a good one. Of course, he didn't say anything about our collapsing manufacturing numbers, the worst global trade numbers since the last recession, or the bloodbath in the U.S. trucking industry. Powell did concede that the risk of less favorable outcomes has risen, but other than vague statements like that, he really didn't acknowledge our growing economic problems at all. Considering the fact that Powell has more power over the U.S. economy than anyone else in the entire country, this should deeply concern all of us. To me, Powell's performance on Wednesday was quite reminiscent of the moment in 2008 when Fed Chair Ben Bernanke told us that the Federal Reserve was not currently forecasting a recession after a recession had already begun. As I have been documenting for weeks, evidence that another major economic downturn has already started can be clearly seen all around us. For example, we got some very alarming news from the steel industry on Wednesday, when the Trump administration slapped a 25% tariff on steel imports last year. That was supposed to greatly help the U.S. steel industry. But instead, a dramatic drop in demand due to this new economic downturn is forcing steel companies to take dramatic measures. According to CNN, U.S. Steel just announced that it will be shutting down a blast furnace in Gary, Indiana, and another one that's located just outside of Detroit. Pain has returned to the U.S. steel industry despite the tariffs put on imported steel last year that were designed to help. Late Tuesday, U.S. Steel announced it will idle two of the blast furnaces where it makes steel, one in its flagship mill in Gary, Indiana, near Chicago, the other in Ecorse, Michigan, near Detroit. The idled furnaces will cut production by about 200,000 tons of steel or more a month, the company said. We will resume blast furnace production at one or both idled blast furnaces when market conditions improve, said the company. But when will market conditions improve? In 2020? After this new economic downturn is over? Never? Of course, U.S. Steel is not the only steel producer that is hurting right now. In fact, Nucor and Steel Dynamics have both cut profit forecasts. U.S. Steel's action follows similar warnings Monday from Nucor, the nation's largest steelmaker, and Steel Dynamics. Both are now forecasting lower profits. Nucor pointed to weaker demand from the U.S. auto industry. Steel Dynamics said steel prices have declined across its line of products. The Trump administration placed a 25% tariff on steel imports in 2018. It helped temporarily lift prices as domestic steelmakers no longer had to worry about as much competition from low-priced steel from China and other locations. Steel customers worried about how much the tariffs would hurt their supply, so they went on a buying binge early in 2018 that also drove up prices. As steel prices and profits rose in the industry, domestic mills brought capacity back up at previously idled mills. Sadly, the truth is that major industry after major industry is deeply suffering at this moment. Our ongoing retail apocalypse is absolutely brutalizing the retail industry. We're on pace to have the worst year for store closings in our entire history. Auto industry sales have been absolutely abysmal, and auto loan delinquencies have shot up to alarmingly high levels. The agriculture industry is going to have the worst year it has seen in at least several decades. Our $800 billion trucking industry is already in the midst of a bloodbath. The real estate industry is poised for the worst downturn that we've seen since the subprime mortgage meltdown during the last financial crisis. The manufacturing industry has not seen numbers this bad since the last recession, and things are rapidly getting worse. But yeah, let's tell the American people that the economy is booming and see if they will buy it. Really? Let's get real. The U.S. economy is mired in the worst slump in a decade, and economic conditions continue to deteriorate rapidly. The Federal Reserve could have given us a short-term boost by cutting interest rates on Wednesday, but they decided not to do that. A divided Federal Reserve held the line on interest rates Wednesday and indicated formally that no cuts are coming in 2019. The decision came amid divisions over what is ahead and still leaves open the possibility that policy loosening could happen before the end of the year depending on how conditions unfold. The central bank predicts 1 or 2 rate cuts in its set of economic predictions, but not until 2020. Despite cautious wording on the post-meeting statement Wednesday, markets are still betting the Fed cuts as soon as July. Perhaps they want to save their very limited ammunition for when the recession officially starts, and I can understand that. But this latest move by the Fed is definitely not going to please President Trump, and it will likely prompt more speculation that Trump would like to demote Powell. At the post-statement news conference, Powell was asked about his future as chairman.
Could you clarify what you would do if the president tweets or calls you to say he would like to demote you as Fed chair?
I think the law is clear that I have a 4-year term, and I fully intend to serve it.
Trump needs the U.S. economy to be as strong as possible as he heads into an election year. The stronger the U.S. economy is, the more likely it is that he will be re-elected. And actually, the Federal Reserve may be doing Trump a favor by trying to perpetuate the myth that everything is just fine. Because if the Fed had cut rates on Wednesday, it would have essentially been an admission that a new recession is on our doorstep. As John P. Hussman has aptly pointed out, with the exception of 1967 and 1996, every initial Fed rate cut has been associated with an oncoming or ongoing recession. Be careful what you wish for. So for now, the Fed seems to have adopted a fake it until you make it approach, and sometimes that can work. Unfortunately, I don't think it is going to work this time, and meanwhile, millions upon millions of Americans have been lulled into a false sense of security, and they're not getting prepared for the exceedingly hard times that are coming. One of my readers recently left a comment in which he stated that what we are facing is not a drill, and I believe that he is quite correct. We haven't seen economic conditions anything like this since the last recession. The outlook is getting worse with each passing day.